Hello, and you're welcome to Global Business Insights, where you get more on the main business headlines across the globe. Saudi Arabia is planning a multi-billion-dollar share sale in energy giant Aramco to raise around $10 billion as soon as June. Preparations are reported to be ongoing and details could still change. The Saudi government owns 90% of Aramco and heavily relies on its payouts, with dividends recently announced of over $30 billion. The South African rand hit a 9-month high as Africa's most developed economy gets set for elections this week. US major indexes closed high on Friday. Today, US and UK markets are closed for the Memorial Day and Spring Bank holidays, but still there are a few data points that could drive sentiment during the week. On May 29, MBA reports on weekly mortgage applications. The next day, we get another revision of US Q1 GDP growth rate and the usual weekly initial jobless claims. On Friday, all eyes on the Fed's preferred deflator, that's the Personal Consumption Expenditure Index. Analysts see the Personal Consumption Expenditures Price Index minus food and energy, that's the core PCEI, rising by a lower 0.2% in April, also the smallest advance so far this year. Latest inflation numbers will also be accompanied by personal spending and income data. From Germany today, we will also get some business climate data. That's for May, where the expectation is to see improvements. Macron, that's the French president, is in Germany having talks with Chancellor Scholz on strengthening the EU economy, including a possible capital markets union. Data on inflation in the Eurozone are also due on Friday, which could feature inflation slightly above the Eurozone 2% target, but possibly not high enough to stop the European Central Bank from easing policy next week. According to ECB Chief Economist Philip Lane, he says policy will still need to be restrictive through 2024, though rates could be cut at the next meeting in early June. Africa Development Bank also kicks off its annual meeting today, and Tesla's board is under pressure to reject Elon Musk's alleged $56 billion pay package. That's a board that analysts are also saying has close ties to the founder. And in the UK, it's all politics as the Labour Party shadow Chancellor Rachel Reeves rolls out rises in income tax or national insurance if they win the general elections, but saying that we should expect spending cuts. Meanwhile, the Conservatives want 18-year-olds to take part in a form of national service if the party wins the general election. Cyril Ramaphosa is promising to do better. Indeed, since 2018, when he pledged a new dawn, little seems to have changed, with rising unemployment, the highest murder rate in 20 years, and widespread corruption. When on May 29, South Africa holds national and provincial elections, analysts see the ruling ANC, that's the African National Congress, winning, but by its lowest share of the vote ever, forcing them possibly into a coalition. As with all coalitions, it can make things better or worse, depending on which of the potential partners they have to negotiate with and the concessions they are forced to make. Mr. Ramaphosa faces the same challenges that has plagued South Africa decades after apartheid, and that is evolving a thriving society that caters for all, especially the less advantaged black population, and doing this without resorting to what some have called a ruinous populism. Ruling South Africa is riddled with socio-political complications, which often manifests in holding the economy back. And even a coalition cannot avoid confrontation with many tough decisions in an economy which is still the most advanced in Africa. The South African economy rose by only 0.1% in the fourth quarter of 2023. In the entire year, grew by 0.6%, down from 1.9% the previous year. There is some good news though. Seasonally adjusted APSA Purchasing Managers Index surged to 54 in April 2024, up from 49.2 in the prior month, to signal a renewed expansion in factory activity, also the strongest read since March 2022. The data also showed improved business activity as better domestic demand filtered through to higher new sales orders. We also got S&P PMI data looking also positive in April, 50.3 from 48.4 in the previous month, indicating a glimmer of hope with a milder decrease in new orders and less load shedding. Many argue that the blend of state and party only led to a new entitlement and state capture mentality fueled by a corrupt haste to acquire lifestyles once enjoyed only by the white minority. To get the delicate balance right requires a different power dynamic that can take the economy forward, and this week's election could be an opportunity to address this. The big question in global macroeconomics is who blinks first with rate cuts, Europe, the UK, or the US. If, as it looks likely, Europe cuts first next week, the softer euro also implies more expensive imports, again, higher inflationary pressures. Already in the UK, the thinking now is that with July elections coming, that is suggesting it is less likely we could get a June rate cut after we did see a sticky services inflation print in April. But many still say the May data could move this situation, though it comes just a day before the Bank of England's Monetary Policy Committee meeting. In the US, stronger than expected economic data coupled with fresh commentary from policymakers is pointing away from any near-term policy easing. It is looking more like an August rate cut at best, as released Fed minutes suggest a lingering uncertainty on the inflation trajectory and resilient labor market, suggesting there is no need to risk a premature rate cut. Other factors like the risk of an oil price spike due to tensions in the Middle East can't be ruled out yet. The Bank of England was the first to begin hiking rates, and the Federal Reserve Bank followed, also hiking before the ECB in 2022. The Fed also paused rate hikes before its European counterpart last year. There are pockets of inflation in Europe above their target level, which is why there's still some uncertainty on what the ECB may want to do, and perhaps they may want to wait a bit and hold rates at the June 6 meeting. It's just 2 weeks away, especially so they are not too much ahead. The ECB may want to wait a bit and hold rates at the next June 6 meeting, especially as they do not want to be too many months ahead of the Fed, even as US Fed Governor Christopher Waller just said last week that he needs to see several more months of good inflation data before supporting a cut. Several more months could easily mean another quarter. Still, the likely trajectory is that the ECB cuts in June, September, and December, leaving a meeting in between each move to exercise caution and ensure inflation remains under control. August is more likely for a Bank of England rate cut, and in the US, the FOMC could cut on September, that's the 17th to 18th of September meeting. All these projections, of course, subject to change depending on the inflation data. In Nigeria last Friday, mass termination of appointments continued at the Central Bank of Nigeria, as up to 7 directors and well over 90 senior management staff were relieved of their jobs. We gather this is as an ongoing reorganization seeks to resize and refit the bank with the talent it needs to achieve its objectives and strategic direction. There's no doubt that the quality and integrity of central bank oversight may have been dented, if only by extensive speculations on missteps under the previous central bank governor, which Mr. Yemi Cardoso may want to quickly address. More importantly, systems and processes will need to be re-engineered and infrastructure upgraded to improve controls and effectiveness and speed, and also enhancing quality of supervision to get the best outcomes. Also in Nigeria, the National Bureau of Statistics said they had began activities to rebase the country's consumer price index and gross domestic product to reflect more updated economic conditions, in line with the United Nations Statistical Commission, which states that countries should rebase their GDP every 5 years. Obviously, more accurate data provides better insights for policy. However, analysts are concerned a rebasing could be an ingenious shortcut to the much touted trillion-dollar economy and may be used to justify higher fiscal deficits and debt, and of course reduce pressures to slash costs of governance. Still, it's the cash flows that matter most. It won't change debt service burdens and the need to improve government revenues. Still in Nigeria, analysts are also pointing out to divergence requiring clarification on current oil production made by the upstream regulator and the Minister of State, Heineken Lokpobiri. The upstream latest oil production status report stated that crude oil and condensates fell from 1,643,000 barrels per day in January to 1,447,000 barrels per day in April. But last week, the minister said oil production was now 1.7 million barrels. Not exactly aligned, except there has been a spike of almost 200,000 barrels per day in the last month. Nigeria has suffered a decline in production due to crude oil theft, vandalism of pipelines, as well as low investment in the sector. Also, analysts have not got any update of late on NNPC privatization amid reports that SaudiAramco could be tapping the market for $10 billion through a share sale in June. It may be a case of if Nigeria does not, someone else will. A proxy advisory firm, Glass Lewis, on Saturday urged Tesla shareholders to reject a $56 billion pay package for Chief Executive Elon Musk, calling it excessive, and which, if passed, would be the largest pay package for a CEO in corporate America. However, Tesla board chair Robin Denholm said Musk deserves the pay package because Tesla hit ambitious targets for both revenue and its stock price. The proxy advisor also recommended shareholders to vote against the re-election of board member Kimball Musk, the billionaire's brother. Best practice is for boards to be advised by a board compensation subcommittee and based on independent competitiveness and pay market analysis with an optimum variable performance and fixed pay mix. Having family of the founder on the board is not unusual, but is going out of fashion. In January, Judge Kathleen McCormick of Delaware's Court of Chancery voided the original pay package. Musk responded by seeking to move Tesla's state of incorporation to Texas from Delaware. The shareholders and board should decide on these matters based on the pre-agreed process and not the courts. Before we close, we want to correct a previous comment on alleged predatory Chinese lending to Kenya. We apologize and wish to state that the assertion that the Kenya Mombasa port was conceded to the Chinese is untrue, even though there was controversy on the issue, which was clarified by Kenyan authorities. Thanks also to the viewer who pointed this out. Asian shares are up as investors braced for a busy week of data that could influence timing for a cut in interest rates. We also got industrial profits in China today up 4.3% year on year in the January to April period. Looking at equities in Asia, it's all green. Nikkei 225, that's the Japanese index, is up 0.66%. Hang Seng also green, 0.86%. Shanghai Composite, that's the Chinese index, up 0.68%. Shenzhen up 0.39%, while the South Korean Kospi is also up 1.34%. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and for the kind comments and following or subscribing on Facebook, LinkedIn, or YouTube and X. Thank you very much for watching. Bye-bye.